Hey guys, welcome to the Macro Trader update for today is March 11th and it's Monday, so I hope you guys are having a good start to your week. What I want to cover today is just kind of the overall market with the Qs, cover a little bit of Bitcoin and crypto, and then we'll have a little update on the Robinhood account, and then we'll talk about some of the macro risks that I'm kind of seeing right now for the market. So okay, so let's see what's going on with the overall market with our surrogate, which is the Qs. Right now, we are in a current uptrend. As you can see, it's a really strong uptrend. Today, we're about flat, down 0.38%. We have a differential indicator right here, indicating that could be a trend reversal. And we have a sell countdown for one, indicating a short-term uptrend. Right now, I think we're right in the line here for this support level at 436. So I think as long as we hold 436, we should be good to go, and the market should be trending up. I think if we break this level, we have some lower levels here on the daily or on the hourly chart of 427. And we do have a buy countdown right now on the hourly time frame. And so I think that's a good move here, and I think we could be in for a reversal. We did hit this 13 here that caused it to sell off on the daily chart, but things are okay. Looking at the weekly chart, we have a 13, which is making me a little bit cautious. I think with this combination of this 13, this 13, and just how things are trending, I think the market is just maybe going to either consolidate or remain here or go down to the downside. I think that we are hitting a really good or pivotal point in the market where greed is there and the risk is definitely elevated since the market has been on such a tear. Okay, with the general market being kind of neutral, let's dive into Bitcoin for a little bit, and we'll see how Bitcoin is doing. Right now we have these 13s for both combo and sequential on the the daily chart. Right now, I think it's maybe going to take a little bit of pause. We actually hit $72,000 today, which is a relatively new high for Bitcoin. And on the daily or the hourly time chart, we have also some 13s that hit here. And then we hit also this qualified D-wave projection for 72,000 as well too. So I think between the daily and the hourly, things are getting a little bit exhausted, but we'll kind of see Bitcoin, in the past has kind of been blown past these and can go parabolic. I did take some risk off from my Bitcoin futures. I did take some profits on that, and that's my short-term trading account for Bitcoin as well too. So if things do change, I can always jump back easily with that. Investing is a little bit different. If you got in pretty early, you should be able to hold your positions a little bit longer, and that should be okay. And specifically for trading, it's okay to jump out of a trade and jump back in a trade and then see how things are reacting and kind of follow your system that way. And then finally, on the weekly for Bitcoin, we just have this upwave projection for $75,000 that's qualified, and we're making our way towards there. RSI, we are just starting to get into the overbought territory, but that can be there and stay in that state for a decent amount of time. So checking out the Bitcoin ETF inflows for on Friday, the 8th, we had $223 million positively flow back into Bitcoin. As you can see here, GBTC has been, on a selling spree with Bitcoin. I'm not sure how much Bitcoin they have left in their fund. And I think as, the arbitrage is limited and a lot of people are getting out of the risk of GBTC and shifting their money and their inflows into some of the other Bitcoin ETFs. Hopefully we'll see this kind of subside and we'll kind of see, more positive momentum. On Thursday as well too, we had about $472 million in there. So trend's still pretty strong. And I think that this trend is going to continue up, and the Bitcoin ETF inflows are going to hopefully continue to support the price of Bitcoin. And on that same note, with the Bitcoin ETF inflows, article from CoinDesk, a lot of the Indian crypto investment platform Mudrex is going to offer the US Bitcoin ETFs for Indian investors right now. Right now, they're just going to be offering the 4 major ones for BlackRock, Fidelity, Franklin, Templeton, and Vanguard. I think this is going to be a really good ad and a really good kind of trend, what we're seeing for Bitcoin and these ETFs. I think that, a lot of us here in the United States and in the Western world, we don't really see kind of the impact of Bitcoin and having cryptocurrencies and trading it on your phone. But a lot of the outside world, specifically India, Asia, South America, they don't have such good monetary policies, and their government is much more corrupt. And so some of these inflows, and hopefully this is going to be a pattern for some of these other countries to start allowing funds and allowing investments to use the Bitcoin ETFs as a surrogate for them. And maybe Hope S is, approving this or giving the thumb light for Bitcoin investments. Hopefully it'll give, some of these other countries also the approval, and hopefully we'll see, more of this happening around the world as other countries allow other people to invest into the Bitcoin ETFs, which, I think is a little bit anti-crypto, but it does allow folks to get into the crypto space and then help, maintain their money and all their hard work that they put into that without getting debased. Also, along the Bitcoin news flow is, MicroStrategy continues to buy Bitcoin. They bought another 12,000 Bitcoin for about $800 million with cash between February 26th and March 10th. Michael Saylor has been in the space for a very long time, and he's going to continue buying Bitcoin. I think if you followed our long-term portfolio, I shifted some of the Bitcoin miners over to MicroStrategy. I think, there are some risks with MicroStrategy and the operations of it, but as they continue to buy Bitcoin, they're acting as a kind of a leverage on Bitcoin, and I think they're trading about 2x or 3x of the Bitcoin ETF, so you do get a little bit of leverage to that. And I think I'm gonna I'll keep you guys posted of if I do make some more switches to MicroStrategy and changing some of the miners into strategy in the long-term portfolio. And then lastly, a post from Sammy Mocha. Right now, Google search interest for Bitcoin has been its highest since the Terra collapse in May 2022, and that's almost 2 years ago. And it's kind of indicating that retail is coming back into the space. And I'm not surprised, as you can see, as more retail folks hear about all-time highs and Bitcoin hitting $72,000. That's definitely going to pique some interest. It's pretty funny, some of the comments in there and some of the responses is that some of the people who were in there the last cycle, it's going to take them some time and it's going to get them to kind of spin up their wallets, and there should be some delay in that. It doesn't mean that necessarily is a peak just because, the Google searches are trending up and retail is getting more interested. I think that's actually a good thing that retail is getting more interested. And some of the folks who are just getting on board for the first time, it might take, a little bit longer to kind of get their wallet situated. And I think with this cycle is even a little bit different with the Bitcoin ETFs. Now, I know a lot of folks are still on Robinhood. I'm still trading on Robinhood since how easy it is. And now instead of opening a wallet and going through all of that, maybe people will buy, Bitcoin and through the vector of the Bitcoin ETF. So who knows, the cycle might even get crazier with how things are kind of flowing in right now. And a little bit of a quick update on our Robinhood portfolio. For some of you guys who just joined me, what we're going to be doing is using this Robinhood account to show you guys how to trade options and some of the other trades as well too. My main challenge is to see if we can grow this account and how well we can do with this account. Who knows? I'm not sure where this is going to be going, but I decided to kind of make this public to kind of push myself and to kind of show you guys how to trade and then kind of show you the details of the ups and downs of trading. And everybody always shows, all the good sides of trading, but today is a prime example of that. So our portfolio was doing pretty good in the pre-market. Things are rallying pretty well. We were around like $3,800, and then after the market opened, things decided to sell off a little bit, and now we're sitting around $3,000 in our portfolio. For another teaching moment for you guys as well too is that I've turned on adding in at about $250 every 2 weeks for this account. So that's something that you should be doing if you're going to be serious into trading and investing. Is you should always have some allocation that is automated that goes into your account. You can definitely grow an account without adding any more money into it, but it takes a very long time. It takes a very large portfolio for that to happen. When you're the very start of the very beginning, it doesn't matter how much you can put in there. Put in as much as you can, whether it be $5 every 2 weeks, $10, $100, whatever it is that you can set aside into trading. It will benefit you in the long run and allow you to have more capital to be able to trade better. And as most things, when you first start out, it's really hard because of the low capital, and things get a little bit easier. And then a little bit update on our positions right now. We have one contract for CleanSpark at $30. We're down $72 or 20% on that. And then we also have Riot $23 calls ending in June. And then I actually bought another contract this morning right here, and we're down about $3 on that as well too. So we do, I did put, entries in for these trades as well too for our clean spark trade. So we got in at about $19, and then if it goes below $16.50, we're going to sell the contracts and get out of that. And then same thing for our Riot trade as well too. We got in around $12.20, and if it breaks below $10.50, we're going to take out, and then I added, another contract here. So we have 4 contracts of for Riot. And, some of these stop losses are based off of the charts that we were looking at. So looking at the clean spark chart right now, things still look like they're doing okay. So we still have sell countdowns, which means the current trend is up. I think we're still above this resistance line right now, or support line for 1980. So things are doing pretty good. We did have this 9 sell on the hourly chart. So that just means that it did sell off and nothing to worry about. Still holding our position strong, and the charts still look pretty good for clean spark. And then swing it over to Riot to check on the chart. Here we have the buy countdowns for a sequential and combo. We can see what the price did last time these 9s hit and starting to appreciate. So I think, holding strong and buying another contract for Riot here was a good option. And I think that's hopefully going to appreciate. And then we'll target some of this upside of, $16, $17, $18. And then we'll start releasing some of those contracts out if we start appreciating. If we get below our stop loss, we'll get out of the contracts as well too. But overall, I look at the charts daily, even though I don't trade and put on a position every single day. I at least check up on the charts for the positions that we're in, just so I'm kind of monitoring things and at least keeping tabs on how the trades are going from a technical perspective. And the final thing I wanted to cover with you guys is just some of the macro risks out right now. So things are doing pretty well right now. Things are just kind of cooling off for a little bit, but there are some market risks that this post from the Macro Compass, which is written by Alfonso, kind of goes over some of the big macro risk. And it's not just Alfonso that's been talking about it. I've heard some other folks talk about some of these other risks as well too. The first major risk he goes into explaining is that the ECB is kind of playing with fire right now. And he goes into that, the bank of the ECB is right now is just not cutting rates yet, and even though inflation's already at 2%, they're still waiting and they're going to see how it goes. This is kind of dangerous because this is how the start of recessions happen, when monetary policy is way too tight and the government is just way too tight on the policy. That just causes banking crises or just a lot of financial crises to happen. Even though they're already at their 2% targets, it doesn't make sense that they are still sticking with the higher rates and tighter financial conditions. So we'll keep a tab and we'll keep an eye on this, and hopefully this is not a major warning. But that is a risk. If Europe does decide to have a big crisis, that's going to impact the US and the whole entire world, since we're all connected. And then the last thing Alfonso kind of goes into is Japan matters. So right now, Japan is about to, end negative rates. So Japan has been doing yield curve control for a while. And I think in the next month or so, they're about to end that. That has a big implication on the rest of us, just because Japan has been a big investor. Because of the negative rates in Japan, Japan has been investing in US bonds and just investing in the world overall. If this major shift happens, what could happen potentially is that, all these investments internationally in the US and other areas right now could be coming back to Japan. And I'm not sure I think in the long term, it's going to be good for Japan and their economy. But I think potentially in the short term, this could affect some of the world equity market. So those are just the 2 things from a macro perspective take a look for. And tomorrow we'll cover it as well too. So stay tuned. Tomorrow is it going to be actually the CPI release. So how does inflation look right now? If it kind of comes in too hot, that might scare the market as well too. So with a couple of those risks in there as well too, I'm not quite as bullish, but I'm not bearish as well too. I'm kind of right here in the middle, just because I understand that things technically look good for the most part, but there are some of these risks bubbling up from the macro economy.